Can we see my screen?
It's coming.
It's coming. Okay, how about now?
Yeah.
Okay, so ever since early October, maybe even a little bit before then, I keep posting about China here. Okay, so China there, we got a write-up about China here. It's the UK there, but we got more about China there and there and here. So I do that as a thing to reiterate ourselves. So when we keep reminding ourselves, it helps us to remember. But these things about China is, so we've had massive stimulus packages happen in China. Okay, and I've done a few posts about what they've done. They've spent trillions and trillions of dollars and whatnot into their economy, especially their stock exchanges like the CSI 300 and Hang Seng. What else? They've loosened their monetary policy to try and bring money in and to stop their economy from falling so much. And that's not a very good side, that one, but there's more about the same sort of situation. So China's central bank resumes gold purchases after 6-month hiatus. Okay, so when places start buying gold, that means they are worrying and they're using gold as some kind of insurance. Okay. China's industrial profits extend decline to a fourth straight month, dropping 7.3% in November. Okay, so China, so this is over the last couple of months. China's manufacturing slows as a global market. Starts 2025. Okay. So the reason I keep posting this over the months and however long it keeps going for is to keep us with the understanding that China might not be doing so well. So if we look at the Hang Seng, we can see what's that, 2019 around 2021, so the end of COVID here. Ever since then, China has not been doing so well with its economy. Okay. So we have an understanding with the chart. We can see a big impulsive down, and a corrective up, and with everything we're seeing with the fundamental side of things now, we're likely to see another impulsive like this to the downside here. Okay. Now, keeping in mind China is the world's largest exporter. So if China slows down, everything else is going more likely to slow down as well. And not only that, over all these years here, when China was making all its money and it was building huge businesses everywhere all around the world, distributed a lot of its wealth around the place. And a lot of China's wealth and investments came to Australia. Okay. So if China's going not so great, it's going to be a point in time where the PBOC, the People's Bank of China, will want some sort of money back. When China invested a lot of that money in places like Canada, the US, and Australia, money's going to start coming out of our countries and going back to China. Okay, so we have the knowing that this pattern is likely to have another impulsive wave down. I hate when that happens. So when we look at the Aussie dollar on a monthly time frame, we can see big monthly trend lines getting broken. Okay, and we know the world's largest exporter, which has a lot of wealth in Australia, might start taking some of their wealth back. So this 1 and 2 in red has a likely potential to turn into a 3 red, 4 red, and 5 below this 3 here. Okay. So what a good thing to do at this time of year, now that the year's started, is start going over the charts that you're interested in and start drawing these big trend lines on like your monthly and weekly candlesticks or your bars, whichever you like to look at, and always refer to these guys because these big ones really hold some merit. Okay, and when you start going into Discord and you go into the news and events here, you can see some news articles which I'll post, which might help your patterns line up with what the fundamentals are saying to give you a better sort of understanding of what probability you have of your trade going in the direction you would like. Okay, so another one, we've had our trade policies about to happen in America. What do we got? They're unable to pay their debts. Okay, so that's more to look at with your stock markets and such. But anyway, for a high potential trade, we know about the trade policies, Trump coming into office. We look at our dollar index. Down here. And this large trend line on the weekly has been broken. Okay, so this can give us the indication with what we know of the fundamentals that this pattern can be a 1, a 2, with a 3, 4, 5 to go above this green 3 here. Okay, so nothing goes in a straight line, but eventually we can come above here. Is there any charts or anything anybody wants to go over at all?
Can I have a quick question?
Absolutely.
So you were said about like how China was buying a lot of gold, and the price, and before Pata was showing like how gold went up very high for the past year. You reckon it's influence from China? Because I've been hearing that news for a while now. In the past, 20 past year, yeah.
So my understanding is China has had a lot of retail investing through last year, and now we are seeing banks, Chinese banks as well as Japanese banks, starting to buy gold again. That will happen due to uncertain times, and like I was saying before, as an insurance against their stock markets to fall too much. They will still have something of value in that country.
So you kind of saying that the price of gold been raising up a lot due to economic uncertainty globally.
Yeah. Globally.
Yeah.
And with saying that, I don't see the uncertainty going away anytime soon. So I would not be surprised if gold keeps going higher for at least. Yep, go on.
But also, like, you see a lot of asset also going up with gold as well. I mean, all the asset class been went up pretty high?
Yep.
Any kind of explanation, or how would you see that? I would love
Okay,
to.
so the house prices in China, where a lot of the instability is at the moment, have fallen 50% of their value over the last year and a half. So this is the next alternative for their retail investors to come into gold. The Chinese have enough spare houses that are not tenanted to house every person that lives in China. So they have a surplus of housing there. So that asset vehicle that they used in China is another contribution to why the Chinese investors are starting to send their wealth to Australia last year. Sorry. So apart from that asset class, are you meaning things like Bitcoin or
Stock,
something like that?
like crypto, stock, and all that
Okay.
at the same time? Yeah, but housing definitely play a big contribution as well. Like Australian houses seem to start dropping based on the recent news.
Based on, I believe, we will follow China and we will get hurt a lot more than China. That's what I would expect. But with Bitcoin, I see a 3 up here. So a large pattern in blue. 1, 2, 3, 4. We're in this last 5th wave up in blue. Okay. Now, in green, this subwave, we have 1, 2, 3, 4, and 5. So this last subwave still has to go up. In the subwave of the subwave, we have 1, 2, 3. We need our black 4, possibly here or here. And then black 5, which will complete this 5. Will also complete this 5. And then there will be a big retracement of the cycle related to this pattern here. So it might be a quite sizable retracement. Okay, so something like 50% at least, but we won't know until this pattern finishes.
Which is kind of like go with the 4-year cycle theory of crypto, which is end in 2025-ish. As they as a lot of people kind of following that 4-year cycle theory. Is it?
Okay.
Isn't
I haven't looked at the 4-year cycle to look back at the history and understand if I can see a relationship there, but it's something I can do and look into it for yourself if you like.
yeah. It's just like the more like the halving cycle is what it kind of meant by 4-year cycle. So like I think you might know, like every 4 year the supply cut in half. And
Okay.
yeah, and then is I think it began from what last year is when it start cutting, and then that's why price tend to go up afterward for like a year or two before it's like have that big drawdown, like how it went in 2021 or 2017 or 18, something like that.
Okay. The cutting cycles I look for are to do with these patterns. Okay, so see we have 1 here and 2. See how the 2 retraced a lot, nearly back to 0. Then we have a 3, 4, 5. Okay, so that I'll start again. We have 1,
Yep.
2 here, That's all the history I got. But the 2 retraced quite a lot back into the 1. We have a 3.
And then the big
then
drawdown again.
Yep. Now, the difference is, see, this drop took a long time to eventuate
Yep.
and wasn't as dramatic as this one. Okay. So each cycle, each retracement cycle, a wave 2 or a 4 has a relationship of some kind.
Because
So-
you have to kind of pay attention to how much is went up as well. So it's correlated to that. Because let's say from 1 to before 1, it went up high, but it not like as dramatic, like you said, from 2 to 3. And that's why from 3 to 4, there's like it's look more dramatic because of how price went up from what, like 7,000 to almost 60 grand. Yeah.
Okay,
Yeah,
so what I'm looking for is the complexity of the retracement in relation to the time that it took. And if those 2 don't meet up, it will be the size of the retracement. Okay. So another example is we have 1, 2, 3, 4, and 5. Quite a small retracement. Now, this is not a real good thing to do it on. This might be better. So here we have 1, 2 retraced only a little bit. 3, 4 retraced a lot. Okay. So we have 1, 2 in pink, retraced a little bit. So I'd say 3, 4 could retrace a lot. So they're the relationships I'm sort of looking at, as opposed to your 4-year cycles with the price halving is something I would have to spend a lot of time to sort of understand a relationship and how it all comes together.
yeah.
Okay, so 1, 2 retraced deep, 3, 4 not so deep, and the retracement took a longer time than this guy here. Okay, so 1, 2, 3, we're still waiting for this retracement to finish to see what sort of halving or time or complexity this retracement will have to this retracement to understand this full cycle here. But at the end of the day, I think this cycle's almost complete. It's just going to go up a little bit higher.
Yeah.
Okay.
Thank you, Matthew, for the perspective.
No problem. Any other questions?
Yeah, Marty, I've got a question that the Jenna also has as well resonated with me was what's your thoughts on oil, short-term, long-term? We're still looking at demand for oil decreases. Everybody's doing their stuff, but do you have a short-term perspective saying it's sort of starting to move up a bit?
Oh, not really, because I'm always looking at this bigger stuff here. See, this is the world's largest exporter. If the world's largest exporter is continuing to slow, it is hard for me to see it is hard for me to understand that this here is going to be an impulsive move upwards. To me, this will just be some part of a correction before we continue to come down further again. So I'm still liking a $60 target eventually. Okay, so not only China is slowing, but we have big manufacturers such as Germany, which has been in recession for a couple of years now, and the likelihood of other countries around the world slowing right up as well. So it's very hard to get my head around this being an impulsive move to the upside, if that helps at all.
Yeah, it does. Thanks, Matty. I to sort of share that sentiment. You see this sort of aligning with the 2-year versus the 10-year as well, seeing as that sort of dip below. I think you showed that a little while ago, and is that sort of supporting the theory of a bit of a downturn coming?
Yeah, and one other thing that I keep posting on my Discord channel as well. Where is it? Where is it? The VIX. Okay, so this measures the sentiment level of the S&P 500, the VIX itself, and a measurement of sentiment is also Elliott wave. So you have 1 and 2, big 3 in blue. So we started our subwave up for 5. So this big 3 in blue happened here on the S&P 500. Okay, so if we're going to continue up here, I see another correction happening. Okay, so this is our fear index, which measures fear. And here I've got here, it tells you how it's calculated and what it sort of goes against. But with the 2-year and 10-year, it is uninverted, I think, at the moment. I'm not too sure. I haven't looked at it.
Yeah, it is uninverted. It's dropped below, and then it had a retracement and bounced straight off that magic line and continuing to go down at the moment. So it looks like it wants to keep going.
Well, we'll see. Nothing happens in a straight line or exactly, but I think something's coming this year. I can see it in a few different places, such as gold going up very high. That makes me think there's a lot of risk in the stock markets. That's another thing I look at. Gold in relation to stocks. But anyway, it's time for Kerry if she wants to make a start.
Thank you very much, Marty. It was wonderful to know your perspective in all the big asset classes and instruments. And Kerry, please, thank you.
I've noticed some of the comments that somebody wants to talk about oil and a few other things. So I'm actually happy to do that on another day and arrange things if people would rather have a look at that.
That would be great. Fantastic. Brilliant.
Yeah, I can just do it on another day. We can arrange a time other than a masterclass. And yeah, but while there's questions there that to be answered, I'm more than happy to just hold off and do mine another day.
No. You go and continue.
Okay. All right. It's actually one of the things that I actually will be talking about is actually George Soros today, and the similarities, I think, between China's economy and the English pound, which is quite ironic.
Kerry, are you sharing your screen?
I'm not yet. Hang on. It's